Howdy. Welcome back to Dion Talk. Over a long enough timeline, we expect rents to go up. But why are they going up so much, so fast, right now? That's what I'm going to cover today. And I've done this once before, but if you stick around to the end of the video, I'm going to explain how I see all of my tenants as much richer than I am. And if this is your first time on my channel, my goal is to teach the average individual that they can reach financial independence in 10 years or less, even if you're not starting from the best position. And what's happening with rents right now can be a big part of that. Most of us are aware that housing prices have increased a lot in the last year. In most years, appreciation is around 5% when you're buying a house. In 2020 and 2021, we're seeing over 15% appreciation in most markets. So it's been a great year to be a property owner, but it's been a bit more challenging to become a property owner. There's also something that a few people get a little bit wrong. Higher property prices doesn't mean higher rents. Tenants don't pay rent based on what the property costs or what the owner's expenses are. Tenants could care less. If it mattered to a tenant what the property cost or what the owner's expenses were, what a tenant would pay for a property with a mortgage and what a tenant would pay for a paid-off property would be very different. As investors, we usually look at things that increase our costs. Tenants don't. Here are some things that an investor should consider. One of the things causing appreciation is, of course, like any other asset class, supply and demand. Demand is as strong as ever, and right now supply is about a third of what we need to have a balanced market. To have a balanced market in the United States, we need about 3 million properties on the MLS. We have a little bit over 1 million, and it's slowly creeping up, starting to get back to normal, but we still have a long ways to go. On top of supply and demand, we have some other factors that were helping property prices go up. One was we had a significant decrease in interest rates. I had a couple of duplexes with mortgages at 5.5% interest. I refinanced in 2020 to 3.5% interest and lowered my payment a lot. But when people are looking at buying properties, lower interest rates means that we can pay more for the property, but the cost to the buyer stays about the same. We just have more money going to the seller instead of the interest on the loan. These lower interest rates brought a lot more people around to thinking about being home buyers. It's a good time to lock in 30-year low interest rate loans. Add to that, we have a pandemic, where for the first time on a large scale, people have the option of working from home. And schools weren't doing a lot of in-person training, so you had kids at home with their families all in the same building, so people wanted more space. So now we have people who don't have to live in the cities where they're close to their work, and they might have their kids attending school at home. So now they have the option of, instead of paying $3,000 to $4,000 for an apartment in a city, they can pay $1,500 for a mortgage in a more rural area and have more space. This increased the demand for properties, which supply and demand works the same. When supply stays the same but demand goes up, cost increases. And this was further amplified by the slowdown in building. The supply chain problems caused prices to skyrocket. Do you remember when wood tripled in price? That slowed down building, which technically decreased supply because we weren't adding as many units as we normally do. And then, in some areas, we had some race riots going on. So that caused more people to want to relocate. A lot of us are aware of what I just talked about. There's other content creators that have made videos. I've talked about it myself, and I agree with those facts. Those are a lot of the reasons why property values increased. But let's take this a step further. If more people are buying houses, why are rents going up? Where are the renters coming from? The facts about demand being high, supply being low, people working from home, kids attending school online, the cost of materials going up are all true, but they are missing one thing: the human factor. A lot of our decisions are made out of fear, or at least uncertainty. When the world shut down, we didn't have a crystal ball. Nobody knew how long we were going to be shut down for or what was going to happen to the economy. Even now, with all the possible variants popping up, none of us are certain what the next year is going to be like. I thought it would be hard to make a joke about a pandemic. But not today. So for a lot of people who got the option to work from home and have their kids attend school online, buying a house wasn't the best option. Who wants to make a 30-year commitment when you might be called back to the office in a few months, or even next year? Not everybody had the down payment, closing costs, money for immediate repairs saved up. Not everybody had the credit score. Not everybody had the right debt-to-income ratio. And even more people didn't have the desire. I'm pretty sure if you're watching this channel, you would buy a house and turn it into a rental if you had to move back to the city. But we represent a very small number of people who think in terms of assets and liabilities. Good job. This caused demand for rentals in rural areas to go up. And yes, in some cities like San Francisco, they saw a rent decrease. San Francisco actually saw a decrease of 31%, which probably explains why Zillow is only saying rents are going up a few percent, when in most markets like mine, we're seeing 20 to 40% rent increases, with bidding wars to get the rental. Supply is nowhere near it needs to be to meet the new demand. So as an investor, it's normal to think that our added expenses and costs are why the rents go up. But this is not why tenants think the rents are going up. I'll actually list their reasons too. Investors keep buying as prices go up, partly due to lower interest rates, partly due to FOMO, fear of missing out. It's one of the reasons why I invest. The longer we wait to buy a property as prices go up, the more we're going to pay. And yes, we will probably have a crash or a correction someday.
Not today.
We are still years away from something like that happening, though. People have been calling for a crash or a correction since 2013, ever since prices went higher than they were in 2008. But high prices weren't the cause of the crash in 2008. It was things like ninja loans, no income, no asset, no job, adjustable rate mortgages, where in a few years the rates could go up to where a person couldn't afford their payment. People borrowing more than they should. The things that caused the last crash are just not here now. And I will fight anybody in the comments below. If you think a crash is coming, please, come at me, bro. There's also another factor that some investors miss when they're running their calculations on buying a property that also contributes to them needing to raise the rents. Property taxes. A lot of people look at the listing on the MLS and they see what the current property taxes are and they use that in their calculations, forgetting that when you buy a property, you create a factual event that tells the county tax assessor the value of that property. And usually, poof, tax increase. Cost of labor has also gone up. Look at all of the help wanted signs that are pretty much everywhere. So to pay our contractors to have their employees or to pay our handymen, our expenses have increased. Also, the cost of materials went up. You remember the wood? There's also one other thing that I hope investors consider. Investing has risks. When we invest, we need to mitigate those risks. Things like an eviction moratorium being a thing now means that we also have the risk of possibly a tenant just choosing not to pay their rent. What this is going to do is cause an increase to rents, larger security deposits, tighter screening criteria on those tenants. We need to mitigate the risk, so it's going to increase the cost to the consumer, which in this case is the tenant. However, like I said a couple minutes ago, none of these costs matter to the tenant. They don't base their decision on any of that. Those are things the owner needs to consider to make sure that our income justifies the expenses that we have. Here are some of the things that dictate whether a tenant is willing to pay an amount for rent or not. First, what do similar sized rentals in the same area rent for? This is the first thing a tenant looks at. The second thing we need to consider with these tenants that are coming from cities to the rural areas, increasing that demand, is the California factor. Most of us are familiar with when somebody moves from a high cost of living area like California or New York and buys a house in a state like Utah or Idaho. The California person is used to paying $500,000 to $1 million for a terrible property. But they're moving to an area where $500,000 up to $1 million buys a great property. So for that person, it makes sense to do an all-cash offer, tens of thousands of dollars above asking, and waive contingencies, because it still feels like a better deal to them than what they would get in California or New York. This is also impacting renters. I'll give an example, but feel free to substitute the cities that are close to you. In Washington State, if somebody's been renting an apartment in Seattle for $3,000 or $4,000 and they move to Tacoma, where you can rent a 4-bedroom house for $2,000, it completely makes sense to contact the owner and say, I'll pay you $2,300 a month. It's still better than what you were paying, and it's a really quick way to get yourself to the top of the application pile. And yes, local investors, I know that there are 4-bedroom houses in Tacoma that rent out for more, but there's a lot just outside of Tacoma that rent for a lot less. Both myself and my brother just had bidding wars on rentals that we had come available in the last couple of months. Everything is negotiable, and sometimes people are negotiating to pay you more. I have had some people ask me, well, what will you do if there is a crash? 2 things. First, I will buy things on sale. And second, I will not worry about rents. If a crash happens, and it's anything like 2008, one of the factors was a lot of people went through foreclosures, which meant they became renters, which increased the demand for a limited supply. At the beginning of this video, I said I was going to explain how I see all of my tenants as much richer than I am. When I was a kid, we used to move into houses and fix the doors and windows and wait for the owners to find out who we are, and then we would move to the next place. My parents tried to tell me that we weren't squatters because squatters trash a property and force an owner to go through an eviction. We fixed them up, and as soon as they found out about us, we would move. But when I was a kid, I used to go to friends' houses, and I would hear their parents talk. And whenever the subject of rent came up, I was always shocked, first, of how much rent was, and second, that it happened every month. And I found it really weird that I found myself in the house of somebody who was so rich that they could afford to pay rent. Even today, with 16 units, I'm house hacking one of my units, living for free, being paid actually to live in the unit that I'm in. But when I get the rent every month, my mind still tells me that all of my tenants are still richer than I am because somehow they can afford to pay rent, even when it's going up 20 to 40% a year. Normally, a lot of owners will do a 5% or so increase to rent every year. Myself, I go with 5% every other year. This keeps tenants happy, I have really low turnover, but in years like this, we're seeing 20 to 40% rent increases with bidding wars. This is going to be one of the first years that I use my binder strategy on my existing tenants, because if you're not familiar with it, the binder strategy is a way to get tenants to request a rent increase and a longer lease. But the main reason I wanted to make this video is because we have some people sitting on the sidelines waiting for that crash or correction that I talked about. And like I said, people have been doing this since 2013, so far missing out on over 8 years of cash flow, appreciation, principal paydown, all of the tax benefits, waiting for something that I honestly don't think is going to happen for several more years. It is always a good day to buy a great deal. Go out, take action. You are going to be alive in 5 years. Start living like it. Until my next video, thanks for coming to my Dion Talk.
We're sorry, the number you have dialed is not in service at this time.